Hello, everybody. My name's Steve Philp, and I'm the Partnership Director here at Portugal Pathways and your host for today's webinar entitled Why Invest in Portugal's Future in 2025. In today's event, we will explore the latest investment trends and opportunities that make Portugal an attractive destination for investors. We'll discuss the country's thriving luxury tourism and hospitality sectors, renewable energy initiatives, growth tech landscape, and healthcare. We'll also touch upon Portugal's favourable foreign investment and tax policies and its golden visa residency by investment programme. But before we dive in, there's a few sort of housekeeping notes. This webinar is being recorded and a watch back link will be sent to all of you via email along with a summary of key points within the next 24 hours. We'll also have a Q&A session at the end. So we really recommend that you sort of take part, leave your questions and comments in the chat as we go. If we don't get to all of your questions during this webinar, our team will follow up in the next few days. So I'd like to introduce our panelists to you. Firstly, we have Paul Stannard. Paul is the chairman and founder at Portugal Pathways and the Portugal Owners Investment Club. Paul's an international entrepreneur who has supported numerous family offices, corporations, angel investors, and ultra-high net worth individuals, which has led to nearly 1 billion in investments over the last decade. Also, I'd like to introduce you to Nuno Santos. Nuno is a tax partner at CMS Law in Lisbon. They are an international law and tax firm. Nuno himself has over 15 years of experience providing tax, legal advice, alternative investment funds in Portugal, and significant expertise in golden visa applications and structuring of financial transactions. Lastly, we have Chris Marsden. Chris is the CEO at RTI Family Office. He has over 30 years experience managing significant wealth for ultra-high net worth international families. And Chris possesses expert insight into private equity, wealth management, real estate, technology, and cross-border tax and financial planning. So thank you, Chris, Paul, and Nuno for joining us today. Just to give the audience just a taste of what we'll be talking about today, last year we saw significant growth within Portugal, which outperformed the Eurozone, and in 2025 is already shaping up to continue this trend. Today we'll be discussing the country's thriving luxury tourism, hospitality, media, events and renewable energy sectors, the growing tech landscape and healthcare. We'll also be discussing the continuous growth of the luxury real estate market. Additionally, we'll dive into the new tax scheme. Bear with me 2 seconds, sorry. Tax Initiative for Scientific Research and Innovation, also known as the IFICI. It's often referred to as the NHR 2.0 tax regime, so named as it followed the end of the existing NHR tax regime to new entrants at the end of 2024. Alongside the IFICI, I also want to talk to the panel today about Portugal's alternative investment sector and its highly successful golden visa residency by investment programme. But firstly, we'll start with the new tax exemption, the IFICI, a little bit of a mouthful. This tax exemption aims to further solidify Portugal's position as a prime destination for entrepreneurs, highly skilled professionals, researchers and innovators, which is what we'll touch on to begin with. The IFICI itself has not been fully tested, so it'll be good to hear from our panel about how broad or indeed how narrow the scope of this new tax regime is for people or organisations bringing productivity and investment to Portugal. So the ideal person to start with on this is Nuno. So can you run us through some of the latest news around this tax incentive, or as I said, NHR 2.0 regime as it's sometimes known?
Of course, Steve. First of all, good afternoon, everyone, and thank you for the invitation to be here today. So this new tax incentive for scientific research and innovation, which is also called the NHR 2.0. I think I'm going to use the NHR 2.0. It's not very technically correct to say so, but EFICI is more difficult to say in English at least. So this new regime is in fact, so it's new, but it's foreseen in the law since the beginning of 2024. But the news, or what is recent, is that it was finally regulated by the government on the past December 23rd. So there are still some activities / companies that require additional clarifications on the respective eligibility conditions, but we expect this to occur in the upcoming weeks because the regime is supposed to start to be applied as soon as possible. But before moving to the activities, I think it's important to say that this regime applies to individuals that become Portuguese tax residents in Portugal, provided that they were not Portuguese tax resident in the previous 5 years, and also that they have not benefited in the past from the NHR or any other tax incentive regime, namely the ex-residence regime that we also have in place in Portugal. And provided you comply with these rules, now with an additional condition, which is you need to comply with these two, but you also need to have an eligible activity in Portugal throughout the entire 10 years in which the regime applies. But provided to comply with these conditions, you will have access to special tax advantages, some of them, to be honest, even more attractive than the former NHR regime. So, but going to the benefits itself. So basically, there are two sets of benefits that result from this NHR 2.0. First of all, there is a personal income tax exemption on income obtained abroad. So provided it does not derive from blacklisted jurisdictions. And this applies to employment, self-employment, or professional income, to dividends, to royalties, to interest, to rental income, and to capital gains. And this is a plus again vis-a-vis the NHR, because capital gains would typically be taxed under capital gains on the sale of shares would typically be taxed under the former version of the NHR, and the NHR 2.0 foresees that there is an exemption on capital gains assessed on the sale of stakes or shares that are held in companies which are located outside of Portugal. Then there is the application of a flat personal income tax rate of 20% on employment income and self-employment income / professional income obtained in Portuguese territory, but again, that derive from those specific activities that we will discuss further. Just an additional note, this application needs to be submitted until the 15th of January of the year following the one the tax residency started. Exceptionally, for people that became Portuguese tax resident in 2024, they will have until the 15th of March this year to still apply for this NHR 2.0. So obviously that is why I was saying that the additional clarification that will for sure be published very soon, it really needs to come soon, because people need to be fully aware of what the regime will be so that they can take a final decision until the 15th of March. Now, looking at the activities, so the activities, again, and being the regime called, or at least focusing on R&D and innovation, the regime is obviously, so it applies to different sets of activities. Some of them depend on the former version of the NHR, all the approvals would depend only on the Portuguese tax authorities. Nowadays, because we are entering into much more technical activities, there is the involvement of other public entities in Portugal that will need to certify that if the person complies or not, or if the activity itself complies or not with the conditions for the person to be eligible for this NHR 2.0. So first of all, there is the activity, which is teaching in higher education and R&D topics, which again, very, very specific. Then we have the qualified working positions or board members of companies that have benefited from contractual benefits for productive investment. And this is something that is typically granted by the Portuguese authorities. So it's a contractual tax benefit, again, specific because we don't have that many companies that comply with this rule. Then we have highly qualified professions that will need to be developed in 1 out of 2 companies. One, companies that benefit from an investment tax regime that Portuguese the tax system foresees. Again, a bit specific. And then we have on industrial or service companies that export most of their activities. So most of their activities is done with non-Portuguese resident entities. But again, it's possible to be applied for, but it's not like in the general, it applies to specific sectors like manufacturing, extractive industries, R&D, education, healthcare. So it's not as broad, of course, as the NHR was, where you could come to Portugal and even not have any activity at all and basically live out of only passive income. Then we also have qualified work positions on economic activities that will be recognized by AICEP, which is basically the diplomatic economic arm of the Portuguese government. So we will have a list of activities that will be deemed as being specifically interesting for the Portuguese economy. Then we have the R&D activities again. We have also people that work for certified startups, and we will discuss this in more detail. And then we have a list of activities that are yet to be published by Madeira and the Azores, that because Madeira and the Azores, as autonomous regions, have been granted the right to define the activities that they will find eligible for this new regime. And we don't have that information yet. Madeira, for example, is about to have new elections, so I think we will need to wait a bit longer to have Madeira's view on this. Azores, I think we don't have information, at least as far as I know, we don't have information yet. But bottom line, if someone becomes Portuguese tax resident and decides to be based in Madeira or Azores, it is expected that the list of activities will be hopefully less restrictive than the ones that I've told you about.
Lovely. Thank you, Nuno. Obviously, there's a lot of information to take in there. My colleagues behind will be sharing some links that sort of outlines that detail. So for those of you that are interested in learning more, that link will appear in the chat very soon. Before we move on, Paul, is there anything that you'd like to add in behind what Nuno said?
Yeah, I think obviously the big thing is capital gains. That's the big change. Dividends is there again. But I think it would be fair to say, the widening of those activities and the ease of the qualifying process will have a material effect on how adoption moves forward. Media industry type people would feed into that, IT, technology. But I think Nuno and I would like to see that scope widened. And also it would be good that there's not too much of a two-step process, because anything that adds extra layers of approval, which we didn't have on the old scheme, will slow things down. So, 100%. I think there's a hope that will, that will be avoided. But we're in the early weeks, and until these things get tested, that's the, we're in the early stages. This happened at the beginning of NHR, at the beginning of Golden Visa. Those first few months, it's a new tax regime.
Yeah, absolutely. I know, Nuno, you touched on it within the last segment on NHR 2.0, but we've got a little slide here which just contrasts the old NHR against the IFICI or NHR 2.0 as we're referring to it. I just would like, if you could just talk around those that in a little bit of detail, so this would just sort of solidify what you were talking about. Maybe 2 seconds, I'll just get that slide up for you. So there it is.
Yeah, so basically this slide, Steve, compares what the former NHR and the new NHR, let's call it this way again, avoiding to mention EFC instead of NHR 2.0. So I think that the first, the high added value activities, which was a concept that was used for NHR purposes, nowadays, something similar to the high added value activities were the activities that I've mentioned a few minutes ago. So under the former NHR regime, you could come to Portugal and not have any kind of activity at all and still benefit from the NHR because you would have income coming from abroad that would not require to be high added value. It could be, for example, only passive income like dividends or rental income or something similar. Nowadays, the concept of high added value activities is much more demanding, and on top of that became a condition itself for you to benefit from the regime. So meaning you can't come to Portugal anymore and have no activity connected to Portugal. In order to benefit from the NHR 2.0, you need to first of all have an eligible activity in Portugal, which will be liable to the flat rate of 20%. And once you have that kind of activity, you also become eligible for all the incentives that you have on non-Portuguese sourced income. So this is a huge difference. In respect of pensions, I would say that this is the main weakness of the current NHR 2.0, because pension income on the last version of the NHR 1.0, it was liable to tax in Portugal at a flat rate of 10%. The pension income is no longer protected by this NHR 2.0, which means that any pensionist that comes to Portugal, and even if the pension comes from abroad, the pension will be liable to tax in Portugal at the progressive Portuguese tax rates that go up to 48%. And then with the surcharges that we have, it could go up to something around 53%, which is mentioned in the table. Dividends and royalties are exempt. Interest are exempt. Capital gains on the sale of properties or rental income would also be exempt. But in here, that's as I was mentioning a few minutes ago, I think that here is the big difference. The capital gains was typically seen as the weakness of the NHR 1.0, capital gains on the sale of shares, because they were typically liable to tax in Portugal, with some exceptions, at a 28% rate in most cases. Whereas under the new version of the NHR, there is no taxation on capital gains, provided that they are assessed outside of Portugal, and also provided that, and this is applicable to all the kinds of income that we are discussing here, provided that the income does not derive from a blacklisted jurisdiction. So it's no longer relevant if, even though it is a blacklisted jurisdiction, if it has a double tax treaty with Portugal, then the exemption would still apply, as it was the case of the NHR 1.0. In the new version of the regime, there is, if it comes from a blacklisted jurisdiction, it won't be exempt in Portugal. So these exemptions would not apply, and the general rules would apply. So this is something which is crucial. But Steve, if you allow me, I would say that this, in summary, this new regime is, in fact, it's likely to be even more attractive than the former NHR, as I was saying, as it tackles one of the biggest weaknesses of the NHR by exempting capital gains assessed abroad. On the other hand, it is much more demanding in terms of its eligibility conditions, and it does no longer protect pension income. And when you look at the conditions and to the activities itself, it is clearly a very interesting regime for Portuguese employers that operate in the relevant sectors, as they have now a stronger pitch for being able to sign talented employees. For clients that want to set up their own business in Portugal, I would say that the options that are likely to be used the most would be the certified startup like path, or potentially those economic activities that are yet to be known or yet to be published, those economic activities that will be recognized by AICEP, because I think that for people that want to start their business, they will need to go in one of these routes to make sure that they get access to the regime. So obviously, finally, we have visibility because we were in a kind of a limbo for a year. Let's see that if this list that is yet to be published turns the conditions a bit less demanding for people that are willing to come to Portugal, as we had a lot of people that wanted to come under the former NHR, which was to come to Portugal and start their own business. So let's hope that this is the case, and the regime becomes a bit more friendly.
Absolutely. And for those of our audience that are sitting on the call today and wondering whether or not they meet obviously this criteria, please reach out to us, and we will obviously put you in contact with Nuno and his team for no obligation discovery call, and Nuno and his team can sort of delve deeper into your sort of personal circumstances. So again, just reach out to us and we can do that for you. Well, it seems that the Portugal government, as you would expect, is obviously still very much committed to attracting talent in those sort of booming sectors aligned to Portugal's GDP growth, such as tech and media, and as Paul mentioned, renewables, hospitality and tourism, as well as obviously the luxury living sectors as well. So we haven't heard from Chris yet. So I'm going to go to you, Chris. So Chris, with this new tax scheme, IFICI, coming into play, and the additional benefits of no tax on capital gains, as Nuno just alluded to, and dividends on foreign sourced incomes for those that qualify, with sort of all that in mind, what impact do you think this is going to have on Portugal's future, and more investors and people are relocating from places like the US and the UK and other parts of the world?
Thanks, Steve, and good afternoon to everybody. I think this will have a huge impact on investors coming into Portugal. I think if you look at the fact that capital gains is no longer going to be taxed in Portugal, I think that will bring in the type of investor that Portugal needs and is looking for. I believe that what how's the best way to put it? I guess I believe what NHR, the original NHR did was encourage people that were not necessarily wealth creators to come into the country. They've made their money, they come and live down in the Algarve, they've got pensions, they're not paying any tax on their pensions. I think this turns everything on its head. I think this allows wealth creators to come to Portugal. As Nuno said, they need to be part of the economy. They will bring businesses, they will bring expertise. I think it's a very, very exciting time for Portugal as a country, and to look at other, moving from other countries. I think if you can come to Portugal and set up your assets in the UK or the US and invest into Portugal and not have capital gains tax, that's a real big incentive for people to come. You're making it easy for them, and you see in many countries around the world that they aren't making it easy for entrepreneurs and for investors. And for Portugal to actually take the decision and decide that what they want to be is a growth economy, which I think is what this is looking to do and to achieve, I think is a big plus for Portugal.
Absolutely. Thank you, Chris. Paul, just finally on that one, do you want to add anything?
Yeah, I think Chris nailed it there, really. We've been inundated for months, everybody wanting to know, what does the new NHR look like? What does it mean to me? But we just know from our inbox, wealth creators, entrepreneurs, there are a wall of people that are looking to come to Portugal to set activity, professional, whether it's a registered startup or a spin-out startup of an existing business abroad. There are lots of different opportunities, and it will be different for different people. But there'll be lots of opportunities to navigate, and it's on their worldwide. So they're not just benefiting from the activity that they're bringing to Portugal. They're going to benefit from their wider activity, depending where their tax if they're going into this tax scheme, and the professional income. For their teams as well, it's quite a high bar before you go above 20%, I believe, Nuno. And I think it is a lot more welcoming than other places, and with a lot of uncertainty in the world. There was a big day in America. I think something happened over there. I can't, we're going to see, a lot of noise and a lot of activity coming out of that, and not everyone. It won't be what everybody wants. So I think Portugal could be a net benefiter of that.
Absolutely. Thank you, Paul. Before we sort of continue into sort of the main discussion and the topic of this webinar, so why to invest in Portugal in 2025, Paul, could you run us through some of the numbers as it relates to Portugal's outperforming, obviously, other international markets? And I believe I've got some slides here for you to talk to. So give me 2 seconds, and here we go. This just sort of frames up, what we're talking about in terms of the overarching subject.
This slide here is a much larger report on Portugal's property market, and the big thing that's driven that market has been the lack of supply. And then you have a lot of private wealth coming to Portugal, a lot of investors coming to Portugal, and then they want to invest in property as well. And the fact that Portugal hasn't built enough houses in recent years. The government is bringing in additional housing initiatives and policies, but they're going to take time. But a lot of whereas if you go back to 2007 after the financial crisis, Portugal was very low down the league table in terms of how it was performing as a country, like Greece. Now it's a contributor. So there's a lot of regeneration investment. The growth trends are all going in the right direction. It doesn't seem to matter who you talk to. Ernst & Young did a recent report showing, how confidence in Portugal is at an all-time high. It's outperforming the Eurozone in terms of EDP, the UK, and many other international countries. And you wouldn't have said that a decade ago. And the life thing, because people want to be in a safe environment. So culture, education, low crime, it's away from a lot of the troubles that we're seeing in the world, because it's on the edge of Europe. So the investment potential is strong. And also because there's, not been enough, there's higher demand than there is. We see that, real estate market is still going to be strong for at least the next 3 to 5 years. Steve, do you want to go to the next one?
Yep.
In 2024, as you see, some markets in property have actually been in decline, and Portugal has outperformed the market. And as you can see, the luxury market is growing much faster because wealth is coming, and it wants to invest in property, and that's almost like a self-contained market, and doesn't really affect the general housing market. But as I say, there was for every 10 homes sold, there was only one built last year. So I think that tells its own story. And then the other stats, which I've got on the screen, show you some of the regional things that have happened last year. So there's some hotspots in there where the market's outperforming, but places like the Algarve, Lisbon and surrounding areas, some of the northern areas around Porto and Braga have also performed well last year, and I think that is set to continue in 2025. The next one, Steve. Yeah, and this 85% of entrepreneurs plan to establish or expand operations in Portugal, compared with 72% in the Eurozone. I mean, this is an Ernst & Young report that they did. And that's, a small country relative to the bigger nations of Europe. And it, it's testament to what the country has to offer. And the similar thing with investment attractiveness. The economic stats don't lie. Inflation is reducing faster than most of the other major European economies, including the UK, and I think even America is slightly behind Portugal in terms of how inflation is declining. Just one more. So the big driver of this, is a lot of people are wanting that flexibility. So Portugal was the first to offer a golden visa, residency by investment. It has a more sophisticated and more established market. It's not property related now, and Portugal Pathways creates an index of all the different golden visa funds across Portugal. So we're always happy to help anybody navigate that particular process with our partners like Nuno. I know Chris has had a lot of experience around these alternate investment funds, but there is some real good opportunities, providing you pick the markets where Portugal is punching above its weight.
Brilliant. Thank you, Paul. Just continuing with this sort of topic of investment, Paul, can you also talk a little bit about what the main sectors are in Portugal right now in terms of performance, and what funds are performing the best as well?
Yeah, I mean, because of Portugal, number one relocation destination in Europe, one of the safest countries in the world, one of the seventh in the world in terms of safety. It's done really well in things like tourism, hospitality, but also media and events. Lisbon is fourth in the world for people wanting to hold international events. Fourth in the world of a capital city. When you've got your Londons and your Parises and your Dubais and New York, it says something about the strength there. Also, the renewable sector, energy, it's been very good at getting approvals and planning, so that moves fast. So it's done very well in consumables, renewables, and obviously the touristic market is growing. Portugal is at an all-time high, and the quality and level of hotels, the bar is raising because the market, is demanding that. So they're all very strong. And finally, I'd also say healthcare. There's a little ecosystem. There's been a number of exits in recent years, where a lot of the talent had gone outside of Portugal and gone to work in places like MIT or Cambridge or Harvard. And now they're coming back to Portugal. And there was an exit a few years ago from a biotech company that, one was sold for 7x, another one was sold for 100x. So, there are some really good sectors but it's having that sort of, spreading that portfolio across a number of funds or a blended fund.
Brilliant.
Thanks for that.
Yeah, brilliant. Thanks for that insight, Paul. Obviously, we've got quite a little bit to get through, and I'm conscious a little bit of the time, so we're just going to move on a little bit. And I want to speak to Chris. Chris, a lot of people that come to Portugal come there for the lifestyle. Weather, maybe not today, as it was raining there today. The culture, cost of living, and obviously the amazing local produce. But is it fair to say that they don't necessarily always structure their income, assets, or investments so they're aligned to life in Portugal? It'd be good to hear from you, from your experience on this, and why it's always important to plan these things early on.
That's a very, very good question. I mean, it's like everything in life, isn't it? When you're moving to a beautiful country and you find beautiful beaches and beautiful weather and beautiful wine, it's why are my finances important? Why should I be doing things now? I've got so much else I can do. Like you say, you can enjoy the great produce, but actually, one of the things for the families that we work with and some of the areas we work on is, you have to recognize and think like you're Portuguese. You have to plan. You have to put in place structures. You have to put in place a plan to make sure that you're not caught in, for instance, the UK tax system or the US tax system. You're in Portugal. So let's work within Portugal. If you've got existing NHR, or if you pick up the new NHR 2.0, make one of your first investments actually talking to someone early on, so that you know you don't make mistakes. What you don't do is rush to do something that's actually causes more harm than it does good. And I think, the earlier you plan, the much better your outcomes are. People move here for life. They don't necessarily move here just for tax. And we were talking a lot about tax today. We talk a lot about what the government are trying to do. And I mentioned earlier about, this is a great tax scheme to attract people. But actually, what lots of people do is they come here because of the lifestyle, because of all the things Paul's spoken about. The tax is nice, and they stay past the 10 years. That's what it's about. It allows you to be in a country that has no succession taxes, no inheritance taxes. I mean, that's such a big thing for people. I mean, with what's just happened in the UK, in the budget there, that's a big area for people coming here. They're saving 40%, but actually, what we have to make sure they do is plan properly for it early on, to make sure that they don't fall foul and get caught in both regimes, or be in the regime they don't want to be in it. And the phrase that myself always and others use is think like you're Portuguese. What would Portuguese people do? What do they use? What structures? How do they save? How do they make sure that they're planning for their retirement? What are the areas they use? And it is vital, Steve. It's vital that you take advice early on.
Absolutely. Think like a Portuguese person is what we always say, isn't it? So I don't want to move away from the tax element quite yet. I knew I want to come to you. In terms of the key incentives for investors in Portugal, and how, in particular, obviously, the alternative investment fund option in Portugal compares with other private equity. I just wonder if you could sort of share some of your insights on that.
Look, I think that, and looking at as Portugal as a whole, and I fully agree with Paul and Chris, by saying that tax is not obviously an important factor, but not the key one. And for example, if you think about Americans are taxed based on citizenship and not on tax residency. So even if they relocate to Portugal, they will always need to deal with U.S. taxation, and that doesn't make them not coming here. And so they're a perfect example of what Paul and Chris were saying. I think that when you look at the tax system as a whole, and you think what the key areas will be, I think that obviously this NHR 2.0 will be a big driver for the relocation, of course, for the relocation, and also for the most likely subsequent investment that these people that relocate will make into the economy. Obviously, we are assuming that the rules to have the NHR 2.0 approved by the relevant authorities do not become a nightmare in terms of bureaucracy. So let's all hope that is the case. In addition to this, and as Paul also mentioned, we still have the Golden Visa regime, which is a very successful regime, which basically, for people that don't know that well, it allows investors and their families to have access to a Portuguese passport 5 years after they have submitted their Golden Visa application. Obviously, we all know that the Golden Visa is now mostly limited to the investment in private equity funds. But the truth is that the funds, which operate in the most different sectors, such as tourism, healthcare, ESG, renewable energies, etc., they have been generating very relevant returns to the investors, and under a very efficient tax framework. And this efficient tax framework applies to NHRs or NHR 2.0s, as well as to regular Portuguese people. So this is something to bear in mind, even when you are ending or terminating your NHR period. Looking at Portuguese private equity funds may still make sense. And why? Because the fund, not only the fund itself is fully exempt from tax, as the distribution of income to the investors that the fund will make is also tax-free if distributed to someone who is not a Portuguese tax resident, or at the flat 10% rate if the income is being distributed to resident individuals. So If, for example, if you are a Portuguese tax resident and you are no longer NHR, or you don't comply with the rules of the NHR 2.0, and you think about investing into a Portuguese company, for example, and you would take a dividend out of that company, you would pay a flat rate of 28%. Whereas if you invest in a fund, which on top of this was exempt, so the income of the fund was already exempt, when you get the distribution, you would pay a flat rate of 10%, which is a very attractive one. I think it's also important to stress something that I think Chris and Paul already touched upon, which is the Portuguese government has been providing very relevant financial incentives and grants to the investment in very specific areas of activity, and even mostly when those investments are made in low density areas. So this is definitely something to take into consideration when defining Portugal as the target of the investment.
Very interesting. Thank you, Neil. You mentioned golden visas, and that's sort of the next topic that I want to come on to. And I'm going to direct this to Paul initially. So obviously I've read, or we've all read in various international media recently that in 2025 an increase in demand is indeed expected for Portugal's golden visa residency by investment program from North America as well as the UK. Now, with so many sort of wealthy value creators deciding to move their operations and or assets to Portugal due to political or indeed tax reasons, as we've seen with the employer contributions and inheritance tax hikes in the UK, which again has been referenced earlier in the webinar. There are also some examples of how sort of similar new policies in places such as Brazil and Canada are sort of taking effect as well. Is this something that you're seeing, Paul? And do you expect it to have a big effect on the number of sort of families that are relocating to Portugal?
Well, bear in mind that the golden visa, they don't have to choose to change their tax status. They can leave it where, and US connected citizens, you know, the golden visa, the main reason is, you know, they get flexibility. They can, you know, aim for that European passport that gives them access to 29 European countries. So entrepreneurs sometimes, you know, they're going for the golden visa because they only have to spend 7 days in country a year in that first 5 years. They're entering into an environment where, you know, it's a well-established golden visa program. There's been a number of golden visa programs stopped elsewhere because they're property related. Portugal moved away from that over a year ago. And, you know, it's a place that people want to have that opportunity. You know, they can have both themselves and their spouse, as well as their parents if they're over 65, and any dependent children that are still in education, so they might not even be children. So for $500,000 investment in one or a number of golden visa residency by investment funds, you know, they can have that opportunity, and that works for a lot of people. And you know, it's not just, obviously people in Europe, they don't need it because they've got an EU passport. But you know, I was on a call with a guy that owns a very large biotech company in New York, and you know, he wants to be a global citizen. So he sees changes going on in the world, and he likes the idea of having a foothold in somewhere like Portugal that's on, you know, it's not that far away from the States. It's access to the whole of Europe, and you know, you're midway between, you know, East and West, aren't you? So it's a very strong thing, and if you're going to go down that option, you know, it's important that you get good advice and talk to people that understand that space. You know, we obviously, Portugal Pathways run the Golden Visa Index, indexing all the different funds. But, you know, companies, you know, I know Chris has a lot of experience in that space with, you know, his team and partners, and Nuno's been involved in setting up a number of funds and actually working with, you know, numerous clients around this space, navigate that journey. And that's what we all try to do.
Thank you, Paul. So I'm actually going to keep with you, Paul. So I'm going to send this question back to you. How do you find out which alternative investment fund in Portugal are approved for golden visa residency by investment?
Well, I think Nuno probably answer this finitely, but they all have to be registered with the regulators, and they have to post something there in terms of their management credentials and what they're offering. So it's all open and upfront. But because of rules about marketing different funds, it isn't easy to find them online. And that's why Portugal Pathways put this Golden Visa Index together. And you can invest in one fund that maybe has a blended approach across a number of those sectors, or you can split that investment between one or two funds. And we've seen that as well. Seen that a lot. But the one thing you can't do is property for Golden Visa now.
Let me just, Paul, if you allow me just to complement what you were saying. So as you were saying, the fund obviously needs to be a registered fund, so it needs to be registered before the Portuguese Stock Exchange Commission, which is the regulator of the fund activity. The fund needs to invest at least 60% of its capital in Portuguese resident companies, and the fund the fund needs to have an outstanding maturity of 5 years each time that an investor comes in. So each investor that comes in needs to be investing in a fund that has at least 5 years ahead in terms of the duration of the fund. And as you were saying, which is a more recent change into the regime, the law foresees a restriction that the fund cannot invest directly or indirectly in real estate. To be honest, it's the $1 million question, knowing what does the law understand as being a real estate investment. We have been following the approach whereby real estate investment is an investment that is expected to generate core real estate income, meaning rental income or capital gains. So like a real estate developer. In our opinion, if you have invested in a real estate project to develop an operational activity, like if you buy a factory to produce something, if you buy a school, if you buy a hospital, or if you invest in a hotel even, where the business is an operating one and not like a pure real estate, we have followed the approach that this would still be golden visa eligible because it's not really direct or indirect real estate investment. But it has been a question that is popping for almost a year now, and we have no like formal opinion being granted by the authorities on how do they interpret this. But this has been our view on the topic.
Brilliant, thank you, Nuno.
Chris,
thanks for that. Oh, sorry, Paul.
I was going to say, Chris, I know you've worked with it, looked after a lot of families' wealth where they've gone through funds. I'd be interested to hear your view on that. You know, obviously, sometimes you've sat and looking after your own client money within some of these funds. I'm just curious to hear your take on the Portuguese alternate investment fund market.
I think, like all of these things, you know, be aware of just going down one route. You know, diversify. You know, it's the same with any investment you do. You know, if you're doing any kind of private equity investments, you know, you would take 10, 12 kind of individual companies. I think if you're doing something in the golden visa space, a residency by investment program, I think, you know, get a blend of funds. I think is probably what we do and would look at. I think also make sure those funds are across different kind of investment areas. So, you know, tourism, renewables, hospitality, you know, all the areas that have been spoken about, have access to them all. You know, don't focus on just one area, because, you know, if something happens, if a law changes, if something unforeseen happens, you're very, very exposed. So I think what we see with our clients that we talk to is very much a blended approach across several funds, or use a fund that invests into lots of other areas, and that's probably the main thing I would say is you look for a fund that gives you access to lots of other investments, and don't just go down one route, because that is fraught with difficulty and risk. And you don't want to do is to increase your risk.
Absolutely.
Does that help? Is that the kind of?
Yeah, no, very good.
Very good. I'm looking at the time. We've still got a couple of topics that I want to touch on before we get into a few of the Q&A questions. I can see obviously questions coming in from the audience. So obviously we talked about Golden Visa for a little while there. Obviously there are other options available as well to investors or people looking to work in Portugal. I know there are a number of other visas such as the D2, D3, the D7, obviously the D8, obviously also known as the digital nomad visa. How relevant are these to anybody looking to invest resources or capital in Portugal?
Look, I think if the way that you look at Portugal is only to invest, I think that the visa is less relevant if your plan is not like to somehow spend time in Portugal. But I think that specifically regarding which visa to choose, I believe that the main difference shall be regarding the effective intention of the client. Meaning, if the plan is to relocate to Portugal and being certain that they will spend most of the year in Portugal because they have their kids studying in Portugal, then I believe that one of the D visas that you mentioned would be the option to go. But bear in mind that when I mean spending most of the year in Portugal, all these visas, apart from the Golden Visa, they require spending either 6 months in a row in Portugal or 8 months in total. So it's the commitment to Portugal is a very relevant one. If the client does not intend to relocate to Portugal, or he is not sure whether we'll be able to spend relevant time in Portugal, I think then the Golden Visa shall be the best option, as it will only require, as Paul was mentioning, the client to spend on average 7 days per year in Portugal, and he will still be able to get the Portuguese passport after 5 years. Then, touching upon what Chris was saying, in case the choice is the Golden Visa option, what I would say is that the client should seek advice regarding the strategy of the existing funds, the targeted returns, and also the track record of the fund managers, that at the end of the day they are responsible for the success or the insuccess of the fund. And I agree with Chris when Chris was saying that the diversification, mostly when we are dealing with people that don't know the Portuguese economy that well. So getting into a new country and putting all the eggs into a single basket, I think it's risky. And as Chris was saying, I think you would be potentially affected by any specific change that occurred in that sector that could jeopardize the strategy of the fund. So if you either diversify the fund, your investment by investing in different funds, or by selecting funds that, knowing that this is the mindset of the clients, were clever enough to create a different range of or different sub-strategies within the same fund, I think that's what clients should clearly be looking at. Again, going back to my area, which is tax, I think that both in the scenarios where the client only seeks to invest in Portugal, or the scenario where the client wishes to combine the investment with the relocation, with the tax residency, I think it's key to have the client properly structured from day one to make sure its returns are as net as possible. Note that Portugal has a range of tax attractive regimes. We have a participation exemption regime that protects dividends and capital gains. We have a very wide range of double tax treaties and European Union directives that will reduce or eliminate the taxation on the income deriving from inbound and outbound investments. So bottom line, my advice would be to once again seek advice from the very beginning in order to avoid unnecessary leakages. But I think that Portugal is clearly on the game when it comes to investing in as a target of the investment.
Absolutely, yeah, brilliant.
I'd also reiterate, Steve, that obviously, if anyone wants to get in touch with us, we can give you the detail on some of these funds that you can invest across many of these sectors, or you might have a particular sector that you have experience or knowledge of that you might want to mix in with one of the blended funds. But whatever you do, get professional advice. You can get in touch with us. We can put you in touch with the right people. But get that advice, and if that golden visa is the route for you, then there are many options out there, and you can mitigate some risk. It's private equity, so it has risk and it has reward potentially, but these are many of the reasons why people are coming is that flexibility that golden visa gives you.
Let me just add one thing, Steve, to what Paul was saying. The minimum ticket, I don't think we have mentioned already, is €500,000 to get the minimum golden visa eligible ticket. We are discussing the need or the recommendation to diversify the risk, but also bear in mind that each fund that you select will require KYC and AML procedure, so it's a big pain. Just it's good for lawyers, and also bear in mind that funds have their own minimum ticket. So you could say, look, I found 5 funds and I want to invest 100,000 in each. Bear in mind that some funds do not accept investments lower than 200, 250, 300. So bear that in mind. And I think diversifying is good, but diversifying into 5 different funds may make you lose even the desire to invest at all. So
yeah, I think the blended funds that are going across those different sectors it can achieve a lot of what Chris was talking about.
Yes.
Excellent. Okay, brilliant. Thank you. So again, obviously we're just approaching the hour mark. I just want to quickly sort of touch upon investing in real estate in Portugal. And again, I'll come to you, Paul. I know you shared a slide earlier about how it outperformed many international markets, including Europe and in the UK. But what's your view on the property market in Portugal, and where are the opportunities moving forward? And are there any sort of specific parts of the market or geography that we should be aware of?
Yeah, I mean, I was on a number of calls last week with some people on the East Coast of, just happened to be on the East Coast of America. And then I was on some calls with some others in Arizona. I was on some calls with some people from Switzerland, and people still, even though the property market in Portugal is hot, and there are some places in Lisbon that, the market is getting hot. And similarly in parts of the Algarve, it's still got a long way to go with central London or New York or whatever. So, there's some great places and opportunity districts in Lisbon, but also, the wider Lisbon, the metropolitan area. Obviously, a lot of people, get attracted by Cascais and that sort of area because of its international feel. But there are lots of other places, the Silver Coast, there's a lot more value there. And cost of living is different. Central Algarve, a lot more authenticity you will get in places like that in terms of the offering. You won't necessarily see a Starbucks in every corner that you might see in, say, the Golden Triangle area of the Algarve. So, again, seek advice. We're happy. We've got partners that can help you with relocation scouting, researching, and some of those people, have been around that market for, forever. And I'm not talking about real estate agents per se. I'm talking about people that are involved in major projects in infrastructure across Portugal, who want to do the right thing and encourage money to come into the market and explore property options or portfolios.
Thank you, Paul. Well, for those that that might need to go, do you want to reiterate that obviously we are going to be sending out a recording of this event. We've got a few sort of topics that I just want to sort of briefly touch on before we go into the Q&A. I want to sort of talk about sort of investment goals and infrastructure and transport links. Now, I know obviously that very exciting that the World Cup is coming to Portugal in 2030. There are plans for a new airport in Lisbon, upgraded infrastructure, including more bullet-style high-speed trains. That's in the works. But how are the infrastructure improvements influencing investments across Portugal? That's what I wanted to know. Will we see new regions or urban developments emerging as hotspots due to the improved connectivity and inward investment? Just wondering if I get sort of, I don't know, all three of your thoughts on this, really. I mean, Chris, I'll start with you. I've been ahead of you for a little while.
Yeah, no problem. I mean, clearly I haven't got a crystal ball, and no one can say that it will do that. But you only have to look around the world. The better the infrastructure, that helps create clusters of businesses in certain areas. Silicon Valley is one. There's the whole in the UK. You got the kind of arc between Cambridge and Oxford, and I think the infrastructure in Portugal being updated and improved will only create areas where certain types of businesses thrive, be it healthcare, be it biotech, who knows. But I do think that any country that spends on its infrastructure will see significant returns.
Okay, brilliant. No, anything to add to that?
Look, I think we will definitely see more and more investment in low density areas. And I think we are already assisting to that situation. And that will not only be on the obvious sectors such as agriculture, wine, and olive, and all of that, but also in renewable energies, tourism, data centers, which is a new big thing in Portugal as well, and other sectors that will be highly incentivized by EU and Portuguese government grants. So definitely this events that are expected to occur, and obviously the infrastructure that will follow, I think that it will help to turn Portugal less than just Lisbon and Porto, and more low density areas will become with more investment and more people involved. And you are even feeling that, even from a residential standpoint, people are starting to look for places a bit farther from Lisbon and Porto because of the prices. So they people that come from London, for example, they don't want to live in the city center. They don't need to come to the city at 9 a.m. So they want to live in Cascais. Then they go to Cascais. It's very expensive, that they start going to Ericeira and to other places. So this will help also on bringing the investments to closer where those people live. So I think all of this will clearly help bringing additional activities to other places of Portugal.
Brilliant. Thank you, Nina. I'm going to move on. We've got lots of questions now coming in from the audience, so I want to go to a few of them. As I said, if we don't get to all your questions, which we're not likely to do, judging by the amount of questions we got, and in fact we've gone a little bit over time, we will get back to you. Our team will follow up via email within the next 48 hours or so. So have a look at these questions. We have a question in from Aaron, and he wants to know what qualifies for the new IFICI tax regime and what constitutes specifically a registered startup. And is this something that you have to have tax and legal advisors to navigate? So perhaps, Nuno, you could sort of take this question.
Yeah, so bottom line, Steve, I think that there are some specific conditions that need to be met for an entity to be certified as startup. so objective conditions, and then we still need to have Startup Portugal, which is the entity that recognizes companies as being certified or not as startups. But basically, as a general rule, the company needs to have less than 10 years. It needs to have less than 250 employees, less than 50 million euros of turnover. And basically, it needs to have a company that has an innovation approach or plan that needs to be recognized by ANI, which is the Portuguese innovation agency, or that it has concluded at least one round of private equity investment, or to have received investments from the Portuguese Investment Bank, or the Banco Português do Fomento. So if you comply with these conditions, you could become a certified startup, which will obviously help that if you are working for, or if you have set up a certified startup company, that's one of the eligible conditions for you to become eligible for the NHR 2.0. So this, as I was saying, for people that want to bring business to Portugal or to set up businesses in Portugal, I think this option of the startup will probably be the one that will be used the most for our clients that want to get access to the NHR 2.0.
Yeah, and just quickly, just on the final point of that question was, is this something that the individual would need to have tax and legal sort of representation and advisors to navigate?
Clearly, I would say 100%, Steve, because it involves dealing with Portuguese public entities that they would not know. It requires complying with specific bureaucracies that unfortunately lawyers are more used to dealing with.
Okay, thank you, Nuno. We have a question in from Bruce, and this is directed to Paul, and he's asking, how does the Portugal Investment Owners Club work in terms of becoming a member, and what does it offer, and how do you get invited?
Yeah, I mean, we brought the Portugal Investment Owners Club community together because, when people are going down an investment journey, it's a bit like, if you get a lead investor into a fund, you can follow the due diligence and learning of that group. If you're a part of a investment community in the form of a club, then you get shared protection, you get shared learning, but more so, the reason we started the club, people aren't coming to Portugal just to retire and have sunshine, and they want life experiences and they want to meet like-minded people. So, all you need to do is go to Portugal Investment Owners Club website and express an interest in finding out more, and then see if it's a right fit for you. But we aim to bring money can't buy experiences for people to Portugal, and it's a chance to meet some of the old money of Portugal with some of the new money that's coming to, make Portugal future even more aligned to investor goals and its country. So it has some philanthropic and community values built into it, so that we all want this country to continue to thrive and actually but maintain its heritage and its history and its culture.
Brilliant, thank you, Paul. Just one more question before we sort of wrap things up, and I'll put this one to Chris. So the question in from Amanda, she's a UK expat, and she wants to understand about her NHR tax status and the recent UK government changes that coming into play in April on bringing her pension into overall inheritance. So she's worried that she will lose a lot of her estate under these changes. And can the panel, or specifically you, Chris, give her any guidance on this?
Yeah, I'm very happy to give some guidance. We need to be careful about what we say, but there are proposals that will come in for 2027 for the pension. But the UK is changing from as Paul said, from a domicile to a residency-based test. And that will mean that people that have lived for significant time outside of the UK can probably work out a way to avoid UK inheritance tax. What I would say to Amanda is take advice. There are people around here in Portugal who have the ability to work both in the UK with your UK assets and your Portuguese assets. I know we work with several groups. I also know that it's a worrying time because the tax take. Someone once said to me, actually, do you know what? 40% of everything you own is just on loan from the government, from the UK government, because they will take that when you die. So you need to actually be very aware of what's going on and how both regimes work and how we can make sure that you don't fall foul of the new UK residency-based regime. Equally, what I would say is, let's sit down and put a plan together to allay those fears, because it's not simple, and you do need good quality financial advice and financial planning to make sure that you avoid those charges.
Brilliant. Thank you.
They can be avoided.
We actually have a webinar, Steve, next week on this, don't we? On this
We
very
do.
subject.
So yeah. When it comes to
anybody that wants to, on
Actually,
the 28th.
I'm on that.
Yeah, I think you are, Chris.
I'll
have other panelists there as well who can guide anyone. But as with all these subject matters, please reach out to Portugal Pathways. We're happy to arrange any meetings with any experts, including the ones on today, in support of whatever activity you would like to take part in Portugal, whether it's life, relocation, or investment. So.
Absolutely, Paul. Absolutely. Yes, I'll come on to. We've got a number of webinars coming up over the next sort of 6 to 8 weeks, and I'll sort of take the audience through those as we wrap up. So I'm really conscious of the time. As I said earlier, obviously, we quite clearly haven't got to all of the questions, so our team will come back to you sort of directly. But as Paul just alluded to, if you'd like a meeting with any of our experts to get greater clarity on any of the matters and discussion points that you've heard today, please reach out direct to us. There's obviously a link here, or reach out directly to me, steve.philp@portugalpathways.io. Again, there's plenty of links within our website. But before we go, I'd like obviously just to thank obviously the panelists and the audience, obviously, for what has been an engaging session about investing in Portugal. But before I'd wrap up, I'd like to hear from each of our panelists, just really to share one key takeaway from obviously today's sort of panel discussion. So yeah, Paul, I'm going to start with you.
Well, I think I'd say start planning early, get advice early, because if you take advice early, then you're going to get clarity and peace of mind early, rather than you throw the rope over Portugal's bridge, and then you find you're pulling it up for 2 or 3 years later because you didn't plan it right in the first place. So plan early and talk to people that have walked this path.
Absolutely. Thank you. Nuno?
Steve, so I would say that even though the NHR regime, the original one, is over or is gone, Portugal is not yet out of the game, as we have tax and visa regimes, which are very attractive to investors or to people that wish to relocate to Portugal. And as Paul was saying, before doing so, seek advice so that you take the right decisions from the very beginning in terms of structuring your investment or your relocation to Portugal.
Brilliant, thank you. And finally, Chris, what's your sort of takeaway?
So I would echo the comments from the guys, from Paul and Nuno, but on the basis of why invest in Portugal's future in 2025, because it's a really exciting place to invest your money. I think there are opportunities here that may not be found in other countries. I think there are areas of growth that will not be found in other countries, and I think that the regime that Nuno so very well highlighted right at the beginning, with no capital gains tax, that there are abilities to kind of restructure your portfolios, your investment, to really take advantage of a true engine of growth for part of the EU. You know, I think, and there are lots of areas that you can look at, but my main takeaway is actually why invest in Portugal's future in 2025, because there are so many opportunities, and it'll be exciting to be part of it, I believe.
Brilliant. Thank you, Chris. Yeah, well said. So as we alluded to, we've got a number of webinars that are coming up in the coming weeks. I just want to sort of draw your attention to the next three. We mentioned in one of the questions that we had about inheritance tax. So we've got a webinar next week, which is aimed at both UK residents and expats, entitled Navigating UK Tax Changes for Expats. We'll touch on, obviously, the inheritance tax law changes. So this takes place next Tuesday, 28th of January at 10:30 a.m. And then following that, we've got another webinar called Finding the Right Place to Settle in Portugal. Obviously all about location, and that is on Tuesday the 25th of February at 4 p.m. in the afternoon, Lisbon, London time. And then finally, the third webinar that we've got coming up is entitled Estate Planning and Investing for US Connected Citizens in Portugal. So for all those of you that are US connected, that takes place on Tuesday the 18th of February at 4 p.m. Lisbon time. All of those links and more detail about what to expect available on our website. If you go to the events section, they're all there with the links to register. It just leaves me to say a big thank you to the audience for taking time out your busy day, and for our panelists taking time out their busy schedules. It's been really interesting. As I said, we'll be sending out a replay of the webinar within the next sort of 48 hours, so you can have a recap on that. But obviously enjoy the rest of your day, and thank you again. Thank you very much.